And good morning, Jessica.
Good morning.
Good morning, Jessica. Good morning, Janice.
Good morning.
Morning, Samantha. Good morning, Erica. I couldn't do Aaron. Aaron Ithaca. Aaron Ithaca. Caitlinica.
Good morning.
Morning, Anthonyika. Dan's easy. Good morning, Danica. There you go.
Why does Sam's name have so many exclamation marks?
Because it's Sam.
You're not
I
supposed
know.
to say it just Sam. It's
Exactly. That's how I expected it to sound. Sam.
Exactly.
when you're in
What's
trouble.
happening, party people?
Oh, just another fun Friday. Woo!
Son of a
Someone,
computer monsters.
someone was talking trash to you about the chat.
I
That's
know.
all right. I'm used to it. It's just Christina. Like, big deal.
I like that. We should have a Finance Friday call today. Yeah, sounds like an important day to be on the call.
Probably a good idea.
Oh, and what if someone on the lending side just joined us to further demystify all this and answer some questions? Man, wouldn't that be something? Man, God,
Crazy.
brutal.
What are the coincidences?
Man, you know what? I'm waking up today in a storm of shenanigans, and I couldn't be happier.
I love it.
Although I did just
Oh,
get off the phone with a really good friend of mine who has to put his dog down, so that was a kind of a heavy start to the day.
Oof.
But you know what? We still love him.
beach.
Dogs have short lives because they teach us the value of loving people because you know what? Life is fickle. They're your best friend for part of your life. You are their best friend their entire life. So it's a gift that they give to us. So if you've ever lost a dog, I'm sorry to bring up those emotions and memories. But just know we love you. Stay around. Well, how is everyone? How's your Friday starting?
Amazing.
I want you to think long and hard about the last few days and come up with some important kind of wins. There's a
I
win.
got one.
I have a win.
I got Jess first and then Jess. Other Jess.
Okay.
Which Jess first?
You go.
So it's kind of like a bad thing, but a win from it. I feel like I'm immensely proud of my boy. Yesterday at the bus stop, there was a crazy lady that had a gun, and he had to run and hide, and he handled it beautifully, and he learned so much from it. And I always worry about him in the world, but the way that he handled it and took charge and just handled business, I'm getting chills, and I just so grateful that he's alive. So that's a win. He's alive, he's healthy, nothing bad happened.
That's a win. You've done a good job raising him.
Thanks.
He goes to Marana, right?
Yeah.
Good job, Jess. That's amazing.
Lydia's signing in from her wind tunnel.
Mhm.
That is amazing. That is a win in parenting. That's a win in development. That's fantastic. All right, Jess 2.1.
Sorry, it's like a party at my son's school. Um, I went to show some buyers a house for the second time, and their parents are co-signing, and their parents like the house, so hoping to put an offer in.
There's the win.
Nice.
Is that the one that was off the market?
Yes, and it's still off the market. I don't know why it's not.
And you were able to get a hold of the listing agent and say, "Hey, I want to see it."
Yeah, she texted me later, a day later, and said we could go and look at it.
I don't understand. I really don't understand that. Like, what were you doing for 24 hours that you could not respond to something that will potentially make you tens of thousands of dollars?
Really busy.
I don't know. Hey, Jess, I'm freaking proud of you for doing that. Fantastic. Let's get your first escrow, okay?
Yeah.
Yes, Queen. Yes.
My win was being on the broker call yesterday and learning more about BrokerBot and just hearing Kristen role play. It was just objective. Like, I didn't realize that you could utilize BrokerBot to that capacity. So I've been playing around with it. And I do have a question about foreclosures, but I'll ask that later. But it was just nice to be able to get some more information and find like a really good tool to be able to use.
Yeah, the scripts and roleplay aspect of that. Did you notice how she handled it? Did she have canned scripts, or was she just asking qualifying questions to get more information?
It was actually incredible. Like for me, I get held up on these specific questions that they ask. You know, she didn't answer it one time. She didn't acknowledge it. Nothing. It was emotionless, to the point, just trying to get the facts so she could. And she said, "How can I help them if I don't have all the facts?" And I'm like, "This is great." Oh, it was so good. If anyone ever is feeling bored on a Thursday, go to the broker roundtables. They're really great.
First and
Right.
third Thursdays.
Second that 100%. That was awesome.
I am annoyed by how much you guys are loving Kristen's scripting and not realizing that we talk about that every time we have an objection handling class. Ask more questions.
That's also, I feel like it tied it in together, you know, like it was so good. I loved it.
But it's like going to a high school kung fu match and seeing Jackie Chan show up. Like Kristen is top level. But I love it because she doesn't have these canned responses. She doesn't have these paragraphs memorized. All she has is a lifetime of results in asking great questions, not being emotional, not being reactive. And we put her on a challenge. We definitely turned it up to 11 on the difficulty side of things, and she was just like, it is what it is, guys. Anthony, what do you got?
What I liked about it is I played with ChatGPT the other day and role played with it. I had to tell my ChatGPT, look, dude, you're being too passive.
Yeah.
Like, I need you to hit me hard. And it was funny because that role play with her on the broker bot, like you could tell that the bot was getting like obviously not getting annoyed or frustrated, but the words were like a real human would probably react to it. And that's what I liked about the difficulty level was higher.
Yeah, I think one of the problems we have in our practice and role play environments is we are too passive. We're too easy. You guys, a lot of you don't know who Nicole Smith is, and she's still an agent with us. She just doesn't come on our morning call anymore. Nicole was like the perfect client on calls because she was infinitely difficult. And it's actually kind of funny. That was just her big stick, and she got excited about being the difficult person to script with because she was just an infinitely difficult as a scripting partner. Does it tie into her personality? I don't know. You decide when you know her. But it comes down to when you're practicing, practice for real world situations. Practice for the offhanded, left-handed, no-handed, someone else slapped you kind of environment. So, Sam, what's going on in the world of money?
Oh man, so many things. All right, so you guys have probably seen a couple little tidbits about the jobs report. So it came in obviously lower than expected. We actually went backwards for the jobs report. So unemployment data shows that we went up by 0.1%, which it's good and bad, right? So the silver lining of that is the chances of the Fed cutting rates in September are super high again. Some are saying it's probably going to be like closer to 50 basis points. Whether they do that all at once, I don't know. We'll find out mid-month when they have their next meeting. But rates are already, like investors are already pricing in a rate cut. So we've already seen rates come down this week. They'll probably gradually come down to the low sixes by the end of the year. The interesting thing though is, you know, on our side, we've all been like, I mean, gosh, the last 2 or 3 years, we've been waiting for rates to come down. And that's been the verbiage we've been talking to clients about. That's been what we've been sort of waiting on. But in order for rates to come down, we have to have negative economic data. And we have negative economic data that lowers consumer confidence. So what we've seen on a larger scale is, although the past 2 weeks, we've seen rates slowly coming down, like incrementally, we've also seen a slowing in mortgage applications. So usually mortgage applications are a good indicator of like the next 120 days, they look back 120 days, or sorry, they look at today's data and say, okay, if we have X amount of mortgage applications today, roughly 30% of those will turn into closed transactions in 120 days. And those have been decreasing as consumer sentiment decreases as well. So the kind of important thing to do with this data is you can look at any sort of snapshot of economic data and you make your own sort of ideas of what it could mean, what it could do. But the most important thing is to see, okay, where does this stack up historically? When has this happened before, and what happened after that? So it's something very similar to the data today, which today being like the last week, is we've seen unemployment data in the 4% range, and that's slowly increasing. We've seen rates in the mid to high 6 range, and that's slowly decreasing. And we've seen housing prices increasing slowly, but they're increasing. So if you look at another similar snapshot in history, when did that happen before? Right after the dot-com crash, or the dot-com bubble burst, so early 2000s, very, very similar economic data. So we had housing appreciation in the 5 years preceding that increased by 70%. Since 2020, we've seen housing appreciate by roughly 45% nationwide. We've seen interest rates go from the dot-com crash, they were in like the high 8s, and they're trickling down now, or they were trickling down to 2002, 2005 to like the mid 6s. And then we've also seen mortgage applications increase. So what happened after the dot-com crash, or what came from the dot-com crash, obviously, is the mortgage crisis. We saw that happen in 2008. And it's interesting how many correlations there are with today's data and what happened back then. The only difference is back then we had almost no regulation in the mortgage side of things. So, I mean, anyone can get a loan. And now that we have like the most restrictive lending we've ever had. So I don't think we'll see a housing crash, but it is important to understand that just because rates are coming down and just because the housing market is still strong, buyer sentiment is changing. And it's a conversation to have with clients around that, because they're making a huge decision when they don't know if the future of their job is intact. I mean, AI is changing a lot of stuff with the employment sector. There's a lot of jobs that will become irrelevant or highly outsourced in the next 10 years. And so it's important to have those conversations with our clients and kind of understand, the fear and the reality of that. The question I have for you guys is, do you think that you are more financially stable as, we're just talking about first-time home buyers, more financially stable as a renter or as a homeowner if you had something happen with your job?
The buttons at the far left side of the screen looks like a microphone.
As the homeowner. Oh,
Sorry, what was that, Caitlin?
I said as a homeowner.
Okay.
I say as a renter only because, yeah.
So you have renter with homeowner.
Go ahead, Jess.
I was just gonna say renter because I mean, like, I don't know, like if your house goes into foreclosure and you can't afford it, or a renter, it just impacts your credit score.
Okay. Who else?
I think homeowner, because if you're a renter, what if they need to requalify you or like up your rent? Then you have to be able to show stable income. And if you're a homeowner, you own your home and you'd be able to, like, say worst comes to worst, like you're really in a bad situation, you could sell your home in order to get out of that predicament.
Are there not also some hardship circumstances that lenders allow in times like that, so you can kind of get some breathing room?
Yeah, I think the most important piece is to understand is our single largest like segment of our GDP is real estate. So like transactions per year. And so if that is threatened, that is the first thing we try and protect. So, we look at like the mortgage crisis, for instance, after 2008, and we had what was called HARP loans. So homes that were underwater or people that were behind their payments were able to refinance without looking at LTV or late payments and qualify for a much lower interest rate and payment. So I think that as a homeowner, you certainly are more protected because, you know, just from an economic standpoint, we are highly motivated to keep housing intact and not have a bunch of foreclosures. We also have, you know, the most equity we've ever had as a country. So that's something also to consider. But the one thing as a renter, you know, yes, you don't have that responsibility, but also I don't know any landlord that has ever decreased rent when they needed to, you know, when stuff went real sideways. I've always seen rent increase. So I would think that you'd probably be more yeah, it'd be a worse position to be a renter in that situation.
I have a question.
Yeah, that's a tough one. It depends on, so there's a couple things. There are programs to allow you to buy a home after a foreclosure, but not a year later. No. Typically, you have like a 7-year cooling off period. There's some extraordinary circumstances that where you can do it in 2 years. But usually if you give foreclosure, you have a 7-year cooling off period. What was the question?
Oh, my question is, I was at an open house over the weekend and I had another real estate agent come in and he was telling me about this like tax loophole for Airbnbs and having like you own an Airbnb for over 100 working hours or you have used it as yeah, he said something about over 100 hours. Okay, so I'm still a little unclear on that part, but he said that you can use it as a business instead of real estate. Do you know what I'm talking about, or do you?
Are you, Dan, is she referring to the real estate professional tax benefits?
I know.
He said that they were not. He said that they were not. They're not in real estate. They're just they're doctors, but because there's like a tax loophole. I don't know. I figured I would ask about it on the call.
Let me do some research on that. I don't know that specifically.
Okay.
All my rentals are long-term, but the reality is there are like so many different tax loopholes with real estate, long-term and short-term. And there's a lot of different ways that you can not avoid, but you can, you know, basically offset income and lower, you know, your overall taxable impact. But with that one specifically, look, I'll do some research and have some answers on the next call. So it's over 100 hours with a short-term rental. Let me put a note in my.
Yeah, with a short-term rental, and he said that that they would be able to use the depreciation, like 1/3 of the depreciation on their taxes, and it can only be for one property a year.
So, well, okay, so
That's like standard, isn't it?
Yeah, that's yep. So for an investment property, you can depreciate it in the first year of ownership.
Okay.
You can depreciate 1/3 of the value, and that goes directly against your taxable income. So if you have, you know, $1 million house and you make $300,000 in income, it's essentially you would pay 0 income tax if you were to depreciate that property in your first year of ownership.
Okay. Okay, yeah, I'm not sure what he was talking about then, but
I don't know, but I want to find out because
okay,
that
thank
sounds juicy.
Thank you. I also have another question if no one else has a question.
Go for it.
Okay. I have clients that sent me a property yesterday. They said it's in foreclosure. It wasn't on the MLS. I looked it up. It is on Zillow. It says it is, oh, and I looked at the tax records. It was purchased by a lender in the beginning of August, and it says cash only. I don't have any, like, there's no listing on the MLS. It says don't contact the current person that lives there. And I'm just trying to get some more answers on it. Who would I go, or like, how would I contact them if it's in the name of a company?
So typically with any like bank owned property, so is it in actual foreclosure or is it pre-foreclosure? Do you know?
It says it.
Oh,
Yeah, no, it was in foreclosure. It was foreclosed on the 28th of July. Yeah.
okay. So typically what happens when a home goes in foreclosure, a trustee is appointed by the lien holder, so the bank, and that trustee handles the sale of it. In most cases, those are sold at auction. So the reason why they say cash is they wouldn't allow for financing on that.
Okay.
You'd have to essentially pay cash or do hard money or something like that, but it would go through an auction process. So for you, if you look up the bank name, you can probably do some digging and find out who their trustee is for that area. And
Okay.
then contact that trustee and ask them when the auction date is, or if they're accepting offers before the auction date. It would have to be a cash offer, but that's the way you could purchase that property.
Okay, cool. Thank you.
Yep.
Great questions this morning, guys.
Sam, I have a client that's a physician but doesn't get his contract for 6 months, and he's been told that we can start soon. I don't know much about that. Can you speak to that?
He doesn't get his contract, like permanent contract?
Correct.
Okay, is he working right now?
Yes, he's in his whatever doctors call the step before they get their
Resident.
Like
There we
residency?
go, residency, yeah, for like
Okay.
a couple of years now.
Do you qualify for residency if they make enough? And typically they do. The issue is the like student loan debt, and usually there's ways to offset that. But we can, so 6 months would be kind of pushing it, but we can fund off of an offer letter. So if he has an offer letter, but the contract doesn't start, as long as that contract date is within 30 days of his first payment. So first payment is September 1st, he'd have to have his start date be October 1st.
I guess they
We
were
do-
told as long as they had some reserves, they could do it at least 6 months out. Does that make any sense?
Yep, so that's using his residency income. But there's 100% there's a way for him to qualify for a house today.
Okay, I just thought other people might like to know that again, if they have any physicians that they can do it ahead of time.
I have a questions for you, Sam.
Yep,
I deal with a lot of international buyers, specifically like from Mexico, and they're coming over here. They either have kids or they themselves want to buy investment properties. Like before like I connect them with a lender, like what is just like a quick, because they're like, oh, am I able to buy over here? Like what's just like a rundown that I can tell them as far as that conversation goes?
yeah, so is this visa, foreign national, what's the status?
So for nationals, they do have visas.
Okay, so
Yeah.
currently, under this administration, you can only go conventional, so no government programs, but it's still, yeah, you would still be able to use all the same sort of programs, like conventional up to 97% LTV, all
Okay.
that stuff.
What
The-
about their like banking status? Like, do they have to have a bank account here? Like,
Yeah, so they'll have to, so the bank is less important as having US credit. So we can use stuff like, cell phone bill, utility bill, we can use alternate credit lines. They'd have to have 3 alternate credit lines or 3 traditional credit lines. So like a credit card, personal loan, and like an auto loan or something. Or
and
two
that
credit.
that has to be here, or I'm sorry, I'm not understand.
Yeah, so the big thing with like foreign nationals is you have to have some proof here in the US of being able to make on-time payments. And
Okay.
you can do that with alternate credit, so like utility bills, cell phone bills, anything like that we could show a history of. And the key thing there is 12 months. So a lot of times you have that, 12-month seasoning you have to wait. There are a bunch of like alternate lenders that will do it less than that, but the terms are pretty terrible, like 30% down, and you're going to be like 2% over prime for the interest rate. So we'd be looking at like a 8% rate, 8.5% rate today.
Okay. So if somebody were to call me and they're like, we're wanting to buy, before the end of the summer, it's more so they would have to wait longer.
Well, there's a way to do it now if you were to
Mhm.
use like some non-QM sort of lending products. But if they wanted to go conventional, they want to have like a good loan term that they could hold on to for 30 years, they want to have 12 months of established credit or history here in the US.
Okay. Okay, got it. Thank you. That was helpful.
Yep.
I have a
Who?
question. Yesterday I was on another call with USA Mortgage, and they mentioned, as a lot of buyers are thinking that the interest rate's going to continue to go down after the next meeting, that they're anticipating that it's going to be the same thing as last time, right? That it'll go down, go and then go back up. But that if they lock in rate now, that right before they close, they can do a reconsideration on the rate in case it's gone down. Is that every lender or lender specific? And are
Pretty
they,
much, yeah,
sorry, go
pretty
ahead.
much every lender has like a float down option. It varies. So it varies lender by lender. Like the kind of median or mean rule of that is if rates drop by like 1%, you're usually eligible to float it down by 0.5. So you don't get the full float down. Really the best way to do it is if you're in a like a rate decreasing market, which we're in right now, locking later on is better. We always have so me and my entire team, we have a lot of software in the background that will look at and scan for economic data points that would cause rates to increase. And we usually have like a 30 to 45 minute window before we have a rate spike. So if rates are going to jump, we'll usually lock in right before that happens. But yeah, the best option in a falling rate environment is to wait as long as possible to lock the rate in, and not do the reconsideration, because it costs you at the same time, and then you don't get the full impact of it. But generally speaking, yes, every lender offers a rate buy down or a float down option.
Thanks.
Yeah.
Is there anything else important that you think that we should be talking with our clients this weekend about besides to anticipate an increase within the next few weeks as far as like competition?
Yeah, so normally I would say, expect a pretty sizable increase in competition, but the mortgage starts have been slower than they should be. So I wouldn't necessarily use that because I don't think it's very accurate. I think the most important thing is we're watching steady appreciation with the housing market, and it's better to buy a house now, let it appreciate, and then as rates decrease, refinance, than to wait for a better rate environment and pay a higher price for the home. The other big thing too is like specifically talking about first-time home buyers, going from being a renter to a first-time home buyer, you're increasing your net worth and overall stability so much more that that's the one I always use when I'm talking to first-time home buyers. Like your economic position changes so drastically by owning a home, just from like a tax liability standpoint, and then also net worth, that it always makes sense to buy a house, no matter what the environment is. But I wouldn't necessarily go with the competition thing right now, just because we don't have the data to really support that.
Okay, thank you.
There was that thing that was BlackRock released earlier this year about how for every 0.5% a rate decreases, you get 5 million new buyers entering the market. Generally speaking, that is true. That's based off like historical data. But I think that just we've had so many things happen in such a relatively short amount of time under this administration from an economic and global standpoint, that I think that the most important thing to talk to clients about is stability. Everyone's sort of like worried about making these big purchases. I have a lot of friends in different industries, boats, vehicles, things like that, and they're seeing the same thing. Like people making big purchases, that's really slowed down. And so that points to consumer sentiment. So when consumer sentiment is down, I think the most important conversation is like, hey, buying a house really increases your stability, increases, it gives you a lot more insurance than being a renter. I know personally, from my perspective, and this might sound like a dick move, but like I'm planning on increasing all my rentals at the end of this year, right? Just the data supports it. Even though the economy is not where people really want it, I still have enough data to support increasing the price on rentals. So, if I'm doing that, pretty even laid back guy when it comes to, not wanting to gouge people, the people are, I don't think I'm alone in that. I mean, Dan, are you planning on increasing rental amounts the next 12 months? Keeping them stable?
Yeah, I've already signed releases for 5 of the tenants and just keep it as going. So we talked about one of them we're actually going to bring down.
Really?
Yeah. But
Just because the tenant is awesome and keep it stable?
yeah, they're at their 5-year mark. So it's,
So
hey, reward good behavior.
there you go.
Yeah, 50 bucks a month is not a huge spend for me to keep somebody in there another 5 years. So
There's something to be said about like a good long-term tenant. It's worth more than increasing and making an extra, 50, 60 bucks.
yeah, it doesn't make sense because you're creating a problem for it anyways. So as long as cash flow's in place and the tenants are decent people, we'll take care of them. It's people over profit. I think that's probably why HSL properties where I throw people out on Christmas, but I like to balance my good grace with the good karma and profits. So I think they come back to me in the end.
Yep, 100%.
I love that.
You guys don't know me already. I'm a soft.
I know you, Dan.
So you cross a line and then I'll cut your head off. But guys, was this worth your time?
Yes.
Thank you, Sam.
Yes, thank you.
There's some newbies on the call today. If you do not know, this is Sam. Sam is my partner in life. We're getting married soon. No, I'm kidding. Not that kind of partner.
Heterosexual life partners.
So
That's a whole different tax bracket.
Discounts.
Don't ask, don't tell.
Yeah, Sam is a lending partner of ours. He's become a great resource. He is our trusted boots on the ground, even though he's in Washington, but he's got coverage everywhere, especially in Arizona. So he's got some good resources. If you don't have his phone number, it'll be in the chat. I'll give you guys 30 seconds to pull it out. He's part of our WhatsApp group, so you can reach out to him directly from that. Say, hey, just the @ Sam. Hey, I'd love information on this, this, and this. One thing I'll tell you is he does a great job at finding a way. It's not like their numbers don't work, kick rocks. It's no, let's find a way. So topic for next week. What do you guys want to pin in on? We talked
Go
about
in the WhatsApp.
Yeah, the tax breaks and stuff like that. If you guys want specific topics to talk about financials, lending, loan products, qualifications, anything around the mortgage world, throw it in the WhatsApp. Let's get Sam some ideas. And if you guys are not part of the WhatsApp and you want to be a part of the WhatsApp, send me a direct message because I'm going to end this call so you guys won't have time for the link. Sam, thank you for being awesome.